Welcome to the Fear and Greed Afternoon Report for Thursday, the 16th of June, 2022. I'm Sean Aylmer. Every afternoon we bring you the 5 news items that happened today that you need to know about. Let's jump into it. Story number 1, the S&P ASX 200 was in the black for most of the day before closing down 0.2% to 6,591 points. That's another new low since late 2020. The banks were poor. Investors are worried about growing bad debts as interest rates rise. Westpac fell nearly 2%, while ANZ and Commonwealth Bank were both lower. The big miners were mixed. Telstra outperformed again, up 1.3%, while Newcrest Mining, South32 and WiseTech Global all did well. Cochlear, QBE Insurance and Transurban were among the worst performing large caps. The worst performer overall was Link Administration Holdings. More of that in a moment. Inghams Group fell 4.4%. The best performer was Appen Group, up nearly 6%, just days before it exits the top 200. Chalice Mining rose 5.2%. Eagers Automotive said it will buy back 10% of its shares, sending its share price up 5%. For story number 2, we're jumping straight to Wall Street. The US Federal Reserve this morning lifted interest rates by 75 basis points, the biggest rate hike since 1994. Chair Jerome Powell signalled a similar move at the next meeting. But, and it's a significant but, he doesn't expect such large hikes to be common. And he does expect that the US economy will achieve a soft landing, which is economic speak for no recession. That calmed markets somewhat, but as the day wore on, a fair bit of skepticism creeped into trading. Technology and financial stocks on Wall Street got a boost on the news. The tech-heavy Nasdaq closed up 2.5%, the most in nearly 2 weeks. The broader-based S&P 500 rose 1.5%. Story number 3, the Australian unemployment rate was steady at a multi-decade low of 3.9% last month, notwithstanding more than 60,000 new jobs were created. The strong labour force data also showed a record participation rate and less underemployment. Economists expect the unemployment rate will fall in coming months. Story number 4, Link Group's share price fell by nearly 11% today, and it appears arbitrage funds have dumped the stock. Link is under takeover offer from Canada's Dye & Durham, but the funding of that bid is under stress, according to media reports, and this morning the Australian Competition and Consumer Commission outlined some concerns about the deal. Arbitrage funds take positions in stocks, hoping to benefit from misinformation in the market. In Link's case, Dye & Durham had bid about 40% more than what its share price was trading. There's a huge arbitrage there, clearly. Arbitrage funds bought the stock, hoping the bid would go ahead, but it seems that the arbitrage funds are now cutting their losses, dumping Link shares, taking the view that the bid won't get across the line. Hence the 11% drop today. And finally, story number 5, the New Zealand economy unexpectedly shrank during the March quarter as COVID accelerated through the population and interest rates soared. It's a bit of a cautionary tale. The Reserve Bank of New Zealand has been lifting interest rates for a while, and that's hit the economy hard. It contracted by 0.2% during the first 3 months of the year. For the full 12 months, the economy expanded by just 1.2%. The problem is that rates are likely to keep rising given inflation in New Zealand is heading towards 7%, which is exactly where Australia's inflation is heading. That's it for the afternoon report for the 16th of June 2022. Don't forget to hit follow on the podcast and find Fear and Greed on LinkedIn, Twitter and Facebook. Join Michael Thompson and I tomorrow morning for the Friday Fast 5 by Fear and Greed. I'm Sean Aylmer. Enjoy your evening.